What is a credit score? A credit score is a three-digit number that shows how likely you are to pay debt. So that means if you pay on time, if you have accounts that are in good standing. Accounts with good standing means you don't owe anything on that account. So you're not on negative, you're on positive. This score is used to determine if you are eligible for a credit card or a loan. We can actually have more than one credit score. I'll talk about that a little bit later. And these scores run between the range of 300 to 850. 850 being excellent, 700 to 750 being good, 600 to 700 are medium, and below 600 is a bad credit score. So there are three main credit bureaus. There's Equifax, Experian, and TransUnion. Each one creates credit reports. Credit reports have the following information. So they have your personal information, they have your name, address, social security, your birthday, and your employment information, just so they can show who you are, what you do. Okay, then it has trade lines. So this shows how many accounts of credits you have, the type of account, if it's a loan or a mortgage. It has the credit limits, so the amount of credit you have available, like you can have a credit of $800 to spend. The balance, so like if you wasted money, let's say you had 800, you wasted 200, $600. And your payment history, how often you pay your credit.
Okay, so today I'm going to be explaining on how to check a credit score, but first up I'm going to be explaining the 5 components to a credit score. So usually loaners are going to check like what's your credit score, and how a credit score is working is depending on your payment history, which is 35% of your credit score, amounts owed, which is 30% of your credit score, lengths of credit history, which is 15%, how many types of credit is in use, which is 10%, and account inquiries, which is another 10%. So there's 4 main ways you could actually check your credit score, which the first one is actually check your credit card or loan statement, which usually a credit card company is the one you're using, will send you a monthly check on your credit score, or you could just check online with your account with the credit company. And then you could also talk to a nonprofit counselor, like a nonprofit credit counselor or a certified housing counselor, which can show your credit score for free and actually review it with you to help you. And you could actually use this credit score service like Credit Karma or FICO, which you could use to check your credit score. But some credit scoring websites, they may seem free, but there are ads with it, or some you just have to pay a monthly fee. Now you could also buy your credit score, which is credit card reporting companies will allow you to just buy your score, so you could check it on a monthly basis. And you could also buy stuff like protection and monitoring from theft, or anybody who wants to steal your credit score.
So the benefits of having a credit score is that you could apply for a credit card to a place such as Macy's, Kohl's, JCPenney, Pandora, if they approve you. It's a better approval chance if your credit score is high, but it's not so much of a good chance if your credit score is low, like at around 300, you would probably not get approved to apply for a credit card. If you have a good credit score, there's an easier approval for renting houses and apartments. So you have an easier chance of putting a deposit down on a house, depending on what level your credit score is on. The car insurance rates are way better for you if your credit score is high, because the insurance companies could tell if you're paying off your loans and debt on time, so they will probably give you a rate that is better. And you have a better chance at getting a job because they see that you're a responsible person and things like that. You pay your bills on time, you don't close old credit cards, and you check your credit report consistently. This is a good ways to maintain your credit score.
Here are different situations of good credit scores and bad credit scores.
This is Heather. She's 28 years old. She's married. She recently got a promotion at her job as a software engineer. Her credit score is at 800. She wants to buy a house. Her credit score is very well because she pays her loans on time and pays her credit cards on time. Keep in mind she only has 2 credit cards.
So here we have Angela, who's 32 and has a credit score of 320. Why her score is so low is because she has too many credit cards and she can't pay them all off. She has actually 8 credit cards. She wants to buy a car, but because her credit score is so low, she can't buy the car that she wants.
So here we have Julia. She's 29 years old. She recently got divorced and she has no children. Her credit score is at 680. She just got a demotion and she's renting an apartment and her daily job is an accountant. Right now, she has 3 credit cards open. Her score is at a medium because she pays her debts on time but not really on time. And since she's just getting a divorce and a demotion, her payments are getting backtracked a little bit.